comparative balance sheet. Actually, as per this chapter, overall 4 different problems we need to work it out. 2, it is based on comparative. Under this comparative, first one is balance sheet and second one is the income statement. And in the same manner, the second one we have to do it is common size. Under this common size, once again, first one it is on balance sheet and second one it is on income statement. Yes, out of these 4, definitely one question will be there in the final examination. So let me explain now how to do this comparative balance sheet. Okay, from the following information, prepare comparative balance sheet. Now this problem is full and full working out of the balance sheet only. Equity and liabilities. This is of 2 different years information is given, 2020 and 2021. Equity and liabilities. The very first one is shareholders fund. Under that, share capital for the first year 5,000 and second year 6,000.
6 lakhs.
Reserves and surplus. Non-current liabilities. Debentures. Current liabilities. Trade payables with various amount is given. And the total of the balance sheet is 15 lakh and 17 lakhs. And next, coming to the assets. If you see the assets, building, machinery, goodwill, stock and cash, the mixing of the various asset is given. So this various asset which has been given in mixing form, let me separate it is into building and machinery as the fixed asset. This fixed asset will appear into the tangible assets. The goodwill also appear into fixed asset, but it will appear into the intangible asset. The stock and cash will appear under the current assets. The stock and cash will appear under the current assets. Yes, this is most important. Now, based on this problem, we need to work it out the answer. What is this comparative? Just compare it. Comparing of 1 year information with the another year information. First, let me work it out how that comparison arises. Just you see that. Now, solution. Comparative balance sheet for the year ended 31st March 2020 and 2021. To work it out this answer, we have only one formula. How to work it out that formula? Let me show it for the first one. In the same manner we need to continue it is for the remaining one. Just see that. Share capital 5 lakh and 6 lakhs. Now when compared to first year and second year, it is increased by rupees 1 lakh. Yes. What we have to do this, apply this formula. Increase or decrease. Increase or decrease divided by first year value into 100. Now you see, increased is 1 lakh. Let me write it here. You see, increased is 1 lakh and the first year value is 5 lakhs multiplied by 100. Yes, 1 lakh divided by 5 lakh into 100. We get 20%. If it is increased means here also increased symbol plus. That's it. This is comparative balance sheet. Next, coming to second one, reserves and surplus. Now first year 6 lakh and second year is 3,75,000. Therefore decreased. Decreased means minus. How much it is decreased? 2,25,000 has been decreased. Now we have to find the percentage of that one. 2,25,000, let me show it here, you see. 2,25,000 divided by first year value. What is the first year value is 6 lakhs into, that is multiplied by 100. The percentage I get minus, because decrease means minus 37.5%. Yes, in the same manner we have to continue it for the remaining things. That's it about the comparative balance sheet. But one information you have to see in the answer is that while working out of the answer, I have shown the extraordinary entries, that is headings. It was not provided in the question. If you want, you can see that in the question only building, machinery, goodwill, stock and cash, it was not given. But where these items will appear under the appropriate heading has been made here. Non-current assets, under the tangible assets, under the tangible assets building and machinery, under that intangible asset goodwill, and under that current asset stock and cash has to be shown. If you write it like this only, you will get the full marks, otherwise you will not get the full marks. Now for the next one, for remaining things let me not show the calculation, only direct answer let me write it out. Now when compared to, this is 1 lakh, this is not 4 lakhs, this is 1 lakh. 1 lakh and 3,25,000 plus 2,25,000. So 2,25,000 divided by 1 lakh means that plus 225%. Next one is plus 1 lakh. 1 lakh has been increased. 1 lakh divided by 3 lakhs. 1 divided by 3 is 33.33% when you multiply. 15 lakh and 17 lakh means that 2 lakhs has been increased. 2 lakhs divided by 15 lakhs into 100, you get 13.33%. In comparative balance sheet, you have the another clue is that even this total also will get the same, because same 15 lakh, same 17 lakh, then you get same 2 lakhs increased, then the percentage also same 13.33%. This is one clue for you people. Now 5 lakh and 8 lakh means that 3 lakhs plus 3 lakhs. Next plus 1 lakh. Then again plus 1 lakh. Next decrease, it is minus 350 minus 175 means that remaining 1,75,000, and this is minus 1,25,000. Now we have to do the percentage. 3 lakhs divided by 5 lakhs. 3 divided by 5, it is 60%. 1 lakh divided by 2 lakhs means that it is 1 lakh, and 2 lakh means that 50%. Again 1 divided by 3, you get 33.33%. 1,75,000 divided by 3,50,000 means that it is 50% of this amount. And last one is 1,25,000 divided by 1,50,000, it is 83.33%. Yes, that's it about the comparative balance sheet. Next method which I am covering is comparative income statements, that is profit and loss account. As per this problem, the income statement is provided as the direct answer. It is question and answer, it is almost it is equal. And how to do this problem comparatively, the comparative income statement, we need to work it out. The formula for this comparative income statement is increase or decrease, increase or decrease, whole divided by first year value should be multiplied by 100, that is to be converted in terms of percentage. What is this increase or decrease? Just see that the first year revenue from operation is 10 lakhs and the second year it is 15 lakhs. When compared to the second year, rupees 5 lakh has been increased. So this 5 lakh has to be divided by this 10 lakhs. 5 lakhs divided by 10 lakhs to be multiplied by 100. Let me show it here. 5 lakhs divided by 10 lakhs into 100. 5 divided by 10, that is 0.5 multiplied by 100, 50%. Like that we have to do it for each and every items, and at the same time income minus expenses we need to find the profit and we need to calculate the tax, all these things. Now let's step into doing the problem. Revenue from operation and other incomes both joins together 12 lakhs and 18 lakhs. And expenses, if you see that cost of material consumed, purchase of stock in trade, changes in inventories, employee benefit expenses, finance cost, depreciation and amortization and other expenses. Any expenses to be in this order only as per the Companies Act of 2013. So income is 12 lakhs and expense is 9 lakh 25,000. The profit before tax is 2 lakh 75,000. On the 2 lakh 75,000 they have calculated the 30% is the tax 82,500 for the first year. On the second year is 18 lakh minus 1 lakh, they get 6 lakhs. 6 lakh, on that 6 lakh when you calculate 30% tax you get 1 lakh 80,000. 6 lakh minus 1 lakh 80,000, 4 lakh 20,000. So all this we are finding the difference whether it is increased or decreased. Now let us see into the solution. Comparative income statement for the year ended 31st March 2020 and 31st March 2021. Now the very first one, revenue from operation 10 lakh and 15 lakh, it is increased means plus 5 lakhs. Then what we have to do, this 5 lakhs divided by 10 lakhs, you get 50%. Now second one is 2 lakhs is for first year, 3 lakh is for the second year. Then it is increased by 1 lakh. 1 lakh divided by 2 lakhs, again 50%. And third one is, if you see the 12 lakhs and 18 lakhs plus 6 lakhs. 6 lakhs it is increased, again 6 lakhs divided by 12 lakhs. 6 lakhs divided by 12 lakhs into 100, you get 50%. Next one is 4 lakhs and 5 lakhs, it is increased by 1 lakh. 1 divided by 4 we get 25%. And next one is 2 lakh and 2 lakh 50,000, it is increased by 50,000. 50,000 divided by 2 lakhs, you get 25%. Now 50,000 and 70,000, it is increased by 20,000. 20,000 divided by 50,000 into 100, we get it is 40%. Next one is 1,50,000 and 2,80,000. It means that 80,000 it is increased. 80,000 divided by 1,50,000, if you see that 53.33%. Now finance cost, it is 40,000 and 60,000, it is increased by 20,000. 20,000 divided by 40,000, you get it is 50%. Next one is 10,000 and 40,000, it is increased by 30,000. 30,000 divided by 10,000, if you see that 300% it is increased. Next one is 75,000 and 1 lakh, if you see that 25,000 it is increased. 25,000 divided by 75,000, again you get it is 300% it is increased. Now 9 lakh 25,000 and 12 lakhs, if you see that plus increase 2 lakh 75,000. 2 lakh 75,000 divided by 9 lakh 25,000 into 100, we get 29.73%. Next, 2 lakh 75,000 and 6 lakh, if you see that plus 3 lakh 25,000. 3 lakh 25,000 divided by 2 lakh 75,000, we get 118.18%. Next one is 82,500 divided by 1 lakh 80,000, you get 97,500. Even you will get this also in the same percentage. Remember that in case of comparative statement, profit before tax and profit after tax, these three things you will get always into the same percentage. 1,92,500 and 4,20,000, you get increased by 2,27,500. This 2,27,500 divided by 1,92,500 and multiply by 100, again you will get the same percentage. This is the clue that you must know that it is. This is the working out of the comparative income statement. This is all revenue is total and all expenses is total. Revenue minus expenses, we get profit before tax, and less 30% of the tax 82,500. The profit after tax is 1,92,500. That's it about this problem. Now I am covering the topic on common size balance sheet under the analysis of financial statement chapter. Under this common size statement, very simple to understand is that every individual value of the balance sheet has to be divided by total of the balance sheet. 2 years information is provided here, 2020 and 2021. For 2020, I think in this liabilities they given 4 values, or the 4 values you have to divide it by 15 lakhs. So what are that 4 values it is given? One, it is share capital, second one is reserves and surplus, third one is debentures, and fourth one is the trade payables. For the 2 different year is provided. And in the same manner, assets also it is provided, building and machinery. This building and machinery will come under the non-current assets. Under that non-current assets, we have to write the fixed assets. Under that fixed asset, it will appear into the tangible assets, and the goodwill will appear under the intangible assets. Tangible assets, intangible assets both will appear under the fixed assets. That's it. Now let us work it out this problem. What is the formula for this? The percentage of each and every item is equals individual value divided by total of balance sheet into 100. That's it. Now let us work it out this problem. First year we have 5 lakhs of share capital that has to be divided by 15 lakhs. We get 33.33%. 6 lakh divided by 15 lakhs, we get 40%. 1 lakh divided by 15 lakhs, we get 6.67%, and 3 lakhs divided by 15 lakhs we get 20%, and balance sheet is 100%. In the same manner for liabilities, 35.29%, 6 lakh divided by 17 lakh. 3 lakh 75,000 divided by 17 lakh, 22.06%. And in the same manner, 19.12%. Next one is 23.53%. Now liabilities over. Let us take example of assets. See, tangible assets, building machinery, intangible assets, goodwill, current assets, stock and cash. Every individual value we should divide it by 15 lakhs. Then first one I get 5 lakh divided by 15 lakh, it is 33.33%. 2 divided by 15, it is 13.33%. 3 lakh divided by 15 lakhs, it is 20%. 3 lakh 50 divided by 15 lakhs, it is 23.34%. And at last one is the 10%. Total it is 100%. Balance sheet is always 100%. Next one is 8 lakh divided by 17 lakhs, 47.06%. In the same manner, if we calculate for remaining things, individual value divided by total, you get these are the percentage. That's it about common size. Balance sheet. Let's discuss the next topic method on common size income statement. So already I have explained about comparative balance sheet and income statement in another videos are there, and comparative balance sheet also it is over. Now I am explaining the comparative income statement. There is a difference of calculation into the balance sheet and the income statement. It's the time you must know this one. Otherwise, while doing the problem on assumption, there is a chance of doing the mistake while doing the problems on income statement. So the calculation of balance sheet is every individual value divided by total of balance sheet into 100. Total of balance sheet into 100. But in terms of income statement, every individual value has to be divided by 10 lakhs. That is, every individual value has to be compared with the revenue from operation. Yes, if it is the balance sheet, we have to divide it by total of the balance sheet. But in terms of the income statement, every individual value has to be divided by revenue from operation. Therefore, this revenue from operation is treated as 100%, and remaining values and all we have to compare it. That is, on sales, what is the percentage of other individual items. Now since the problem it is given the direct problem as a first problem, how the format will be there. So let us understand this one. Based on this, the other problems we will try to work it out. Now revenue from operation, other incomes, total of these two it is 12 lakh and 18 lakhs, and expenses around 7 different expenses will be provided. Cost of material consumed, purchase of stock in trade, changes in inventories, employee benefit expenses, finance cost, depreciation and amortization, and other expenses. Total of all these expenses is 9,25,000 and 12 lakhs. So 12 lakh minus 9,25,000, it is the 2,75,000 is the profit before tax, and 18 lakh minus 12 lakhs you get 6 lakh is the profit before tax. On this 2,75,000, tax is calculated 30%. When you minus 30%, remaining 70% is the answer. Now let us work it out, this problem. So in terms of income statement, revenue from operation, it is sales is always 100%. Now the second case, other incomes, what I have to do? 2 lakhs divided by 10 lakhs. Let me show it here. One calculation. 2 lakhs divided by 10 lakhs into 100. On 10 lakhs, 2 lakhs, it is 20%. So next one is 1,20,000 divided by 10 lakhs. The answer will be 120%. 4 lakhs divided by 10 lakhs. It's very easy, since it is the 4 and 10, I can compare it is 40%. 2 and 10 means 20%. 50,000 divided by 10 lakhs. It's only 5%. Calculation also it is very easy. When 50,000, next one is 1,50,000. So 1,50,000 will be 15%. 40,000 divided by 10 lakhs into 100, 4%. 10,000 divided by 10 lakhs it is 1%. 75,000 divided by 10 lakhs it is 7.5%. 7.5%. Next one is 9,25,000 divided by 10 lakhs it is 92.5%. Next 2,75,000 divided by 10 lakhs into 100, 27.5%. And 82,500 divided by 10 lakhs will be 8.25%. At last 1,92,500 divided by 10 lakhs it is 19.25%. Yes. Continuation now. Second case, 3 lakhs divided by 15 lakhs. Again 20%, you get 120%. 18 lakhs divided by 1 lakh 15, sorry, 18 lakhs divided by 15 lakhs. Now 5 lakhs divided by 15 lakhs it is 33.33%. 2,50,000, half of 5 lakhs. In the same manner, half of this percentage. Calculation will be very tricky of calculating this one. 70,000 divided by 15%, 4.67%. And in the same manner for the remaining things we get 15.33%, 4%, 2.67% and 6.67, that is 1 lakh divided by 15 lakhs. Total it is 12 lakh divided by 15 lakhs, it is 80%. And 6 lakh divided by 15 lakh it is 20%. 1,80,000 divided by 1,50,000, sorry, 15 lakhs it is 12%. At last on 4,20,000 when we compare that it is 28% we get. That's it about common size income statement.